Good morning and welcome to all participants. Thank you so much for being present today. My name is Maznah and I'll be moderating the first topic of today's Banking and Finance Summit, discussing the future of banking. What will banks look like in the new normal? As we all know, the COVID-19 pandemic has changed our lives fundamentally and irreversibly. Very quickly, an unprepared economy and society at large had to come to terms with the reality that had never been seen before. Industries such as automotive and tourism sectors are left reeling. The banking sector is not spared either. The few winners were those that had a digital business model in place before the COVID-19 hit, such as firms that were already doing a lot of their business through e-commerce. Unlike the first financial crisis and also the 2008 and 2009, this time the banks were not the cause of the problem. They were part of the solution. During lockdown, which resulted in adapting the work from home, branches have to be reorganized to comply with the new hygiene requirements. Systems and processes were adapted to enable digital solutions to be offered quickly with minimum red tape for immediate implementation of government subsidy programs. In the short term, banks may have seen one-off effects through heightened demand for loans and subsidies, but on a closer analysis, however, reveals the possible of a rather challenging picture. Disruptive changes affecting banking, business, and operations will be the new normal, which may have to be accelerated after COVID-19 pandemic. Ladies and gentlemen, we are honored and privileged to have with us this morning 4 distinguished panelists from the banking and financial industry to share their views in respect of the following issues. First, what are likely changes faced by the banks in new normal and what are the future trends that we can expect in the banking sector? 2, how do banks strategize with the global banking trend and challenges when considering the aspect of environment, social and governance policies, ESG, with a focus on sustainability? Third, we will also hear from the panelists on the impact and readiness of the digital trends in the banking industry. And lastly, we'd like to hear the views of the panelists on how to enable the banking sector to deal with digital disruption. Without much ado, let me introduce the first panelist, which is Dato Ong Eng Bin. He is the CEO of OCBC Bank, a seasoned banker, serving in various capacities of the bank for the last 30 years. Without much ado, let's share with us, Dato Ong, your views on the first issues. What are likely changes in the new normal? Thank you. The floor is yours. Dato.
Thank you, Dato Maznah, and welcome everyone, and thanks for inviting us, the panelists, to speak a little bit about what we can anticipate going forward. Let me just start by saying that when I joined the bank early on, I think there was a gentleman by the name of Bill Gates who actually made a remark in 1994. He said that banking is necessary, but banks are not. And I think that tone perhaps set the stage for what we want to address today. I think it's very easy to paint a not so rosy picture about banking today because there are so many fintech companies, giant companies, and certainly if you look at the biggest companies in the world today, the top 10 definitely, you won't see a bank there. In fact, if you look at further down the list, the top 30, there are only 2 banks, and these are the American banks, JP Morgan and Bank America. You won't even find the Chinese banks that used to stay at the top. But having said that, I think it's also important to realize that banks have always been around. We may not have that kind of so-called news flow in terms of valuation by shareholders or the market, but clearly our role is so very important. And I think I wanted to emphasize this. I believe that the YB Minister of Finance and even Dato Maznah in her opening remarks mentioned how the banks are so critical to actually help the economy regain its foothold. Certainly, there are a few things that are very, very important that I believe, even in my 30 years, I've witnessed banks, these have never changed. There is a slide that I wanted to touch on that perhaps we can share it. Okay, I think the most important thing is that the banks have been working very closely with Bank Negara, the government, to ensure that the economy finds its footing. As mentioned, I think working together, we have helped 2.6 million borrowers to help them over the last 18 months to get back on their feet. In fact, today we also do not underestimate the importance of getting back on our feet. Customers, especially the SMEs, need to be ready to open up when the economy regains its footing. How can the banks help in this transition period? I think that the true test of banks on the trust and integrity is the time of crisis. Because we are strong in capital and the way we have to thank Bank Negara for their so-called oversight that kept our capital strong to enable us to continue to be able to help our customers during this period of time. I think the other point is that we very often underestimate the need to have the human touch. In this day and age, we often feel that if we can do transactions online through digital, there's no need to actually meet the bankers. But you'd be surprised how during this pandemic, even though we've seen a huge jump in digital transactions and people doing a lot of things online, but the reality is that even at our branches that we continue to keep open, we still have a steady stream of customers who come in. Because again, even as banks want to transform to the new digital age, we also have to realize that some of our customers also still want the human touch. And we have to have that principle that we don't want to leave anybody behind. There are also people who feel that they need to speak to the bank. They want the safety of doing a transaction where they can see and feel, and if they have problems, they have to come to the bank. And even today, even though we have technology, communicating with our customers like this webinar is so critical because we all want to have that connectivity to know that, okay, and share ideas together. And this can only be possible if we have that human ability face to face. Now, we talked about the role of banks, how to help in the economy. I believe that one of the key things that will change dramatically from this landscape arising from COVID-19 is the fact that banks would have to really embrace a wider group of stakeholders. In the past, I believe banks focus a lot on shareholders and regulators. I think these were very important, although they maybe pay some lip service to certain other things, but increasingly you have to have the voice of the people, the staff, and the community that we serve. The reason for this is because if you look at the bank's role, the economic footprint of banks are so huge. And it's so important that whatever you do, you recognize its impact on the community. So this is very, very important. Now, if we look at the right side where we talk about opportunities post-pandemic, I think transformation and innovation is very, very critical for banks. In the past, I think banks have always built their systems on robustness, impregnable, and for good reason. I think because of the security aspect of banking. But over time, we have to realize that it is equally important to be agile, because we need to be able to share some of this information internally and to make use of it. I think this is where the fintech companies are very good in this, because they have built their systems probably in the last 5 to 10 years, and they're able to adapt very, very easily. So this is the ability to transform that we need to continue to invest together. I think this will also lead me to the next topic, which is actually on how to work together. I think we talk about fintech, the embedded finance business that many of the big companies, the giants want to do. And we always talk about they want to eat our lunch and et cetera, et cetera. But the reality is that the banks and the fintechs have to also recognize that one of the way we can actually grow together is to share the meal. You know, I use the term share the meal rather than try to fight each other. I think in this world today, we realize that many people, even the political powers to be globally, they don't think so much about cooperation. They talk about competition. I think this is not the right way and approach to do. So it's important to recognize that I think banks themselves, we cannot be serving everybody. There'll be others that other ecosystem players can serve better, and we can work together, because over time, they will be able to serve a segment of the market when they are at a particular stage of their growth. And when they're at the bigger stage, they can come to the bank. So I think if we believe and we share this win-win ecosystem, I think the future will be much brighter for everybody. And finally, I think one of the panelists will talk about ESG. But I think I want to emphasize that the S is very important, because we tend to focus a lot of environmental issue today because of the climate issues that we face today. I think it's equally to recognize the importance of social, because even as we transition, even when we talk about some of the industries that Malaysia faces especially, the impact on the community is quite critical. If we talk about digital automation, and then it results in displacement of people, jobs lost, it's also something that to be aware of. So in a sense, I think this is one part that should not be ignored as we transition to a better and more wider and embracing economy. Thank you.
Thank you, Dr. Ong. Very kind inputs there. So to summarize his input there, I see a few points that are worth looking at. The key areas, I like the part where you say banks are here to stay. Yeah, since we have been all bankers, I think we are part of the economic sector, and banks are surely here to stay. Number two, this is also interesting to understand how regulators have helped the recovery, the importance of trust and integrity. That is very important. He also touched on the point of the reality of a human touch. Yeah, this is still important, and looking into the customer-centric strategy. And e-commerce, of course, we all acknowledge the continuity continue to be accelerated. And we see that banks do not compete with fintech players, but rather complement to serve the customers with the view of lowering the cost of doing business. So by doing so, banks can also focus on other bigger things. But what's important, he highlighted, is the coexistence with the bigger technology provider. So on that note, let's move on to the second speaker. Yeah, the next panelist, which will share with us his views on how do banks in Malaysia strategize and put in place with a much talked about global banking trend and challenges in respect to ESG with focus on sustainability. Yeah, I'd like to take this opportunity to introduce Mr. Stuart Milne. He is the CEO of Hsbc Bank Malaysia and the Group General Manager of Hsbc Group. It is interesting to note that Mr. Stuart is a seasoned banker as well, and it is very important that he is now heading the initiative of ESG in the banking industry. Without much ado, May I now pass over to you, Mr. Stuart? Thank you.
Thank you very much, Dato Maznah. Selamat pagi, everybody, and thank you very much for inviting me to join this session. Dato Ong has covered very eloquently the broad themes facing banks coming out of the present crisis and how banks have tried to stay true to our mission of facilitating economic resilience and growth despite the challenges of the last 18 months. As Dato Maznah is saying, I now want to shift gears a little bit and talk about one of the great challenges facing the world today and the role that we as banks need to play to help meet this challenge. And of course, I'm talking about climate change, the path to carbon net zero, and the wider question of environmental, social, and governance matters. I think this is highly relevant to us today because climate change represents a massive opportunity for the banking sector, and ESG will help us to build back better post-crisis. So I was very heartened to hear YB Tunku Zafrul exhort the banking sector to up our game in this area. COVID has taught us that nature-based risks are very real. In fact, they can be existential. The damage in lost lives, impaired livelihoods, and life chances has been so visible and tangible over the last 18 months. And we'll be counting that cost for years to come. The challenge of climate change, on the other hand, is more severe still, but drawn out over time. It's been difficult actually to capture the urgency, politically and in broader society, to respond to the challenge. According to the Intergovernmental Panel on Climate Change, the global surface temperature will continue to increase and will pass 1.5 degrees centigrade and 2 degrees centigrade by 2030 unless deep reductions in emissions occur now. Extreme weather and natural disasters, accelerating biodiversity loss, and economic instability are already happening today. The challenge is huge, and few places face a greater challenge than our own region here in Asia. Asia actually hosts more than 50% of the global population and hosts 11 of 15 global cities most vulnerable to rising sea levels. And Asia has the biggest financing gap. The total regional investment need is around $66 trillion over 3 decades to limit temperature rise to 1.5 degrees Celsius. So what is the opportunity here for banks? Well, clearly the most significant contribution a bank can make is to support its customers to decarbonize. This is a matter of resilience and prosperity. And with such a large investment need, we have a big opportunity to drive growth in our lending books. At HSBC, we're prioritizing financing and investment to support our customers' transition to net zero. We've pledged to reach this across our own portfolio by 2050 or sooner, in line with the goals of the Paris Agreement. And to do this, our customers need to switch to more sustainable ways of doing business. We've committed up to $1 trillion of financing and investment by 2030 to help them get there. And here in Malaysia, HSBC Amanah, our Islamic banking subsidiary, is on a path to become HSBC Group's first sustainable banking entity by the end of next year, meaning that more than 50% of its loan portfolio will be ESG compliant. We're just one of many banks that have come out with ambitious climate targets since COVID hit. The environment is one area where if we're not part of the solution, we're going to be seen as part of the problem. But more than that, it can be a significant driver of future profits to those that get it right, both for our customers and for us as banks. So what role can banks play in meeting these challenges in Malaysia? Malaysia, of course, is fully committed to being a part of the global transition to a low carbon and eventually carbon neutral society, having committed to reduce greenhouse gas emissions by 45% by 2030 over 2005 levels. But like everywhere, there is more we can do. Just let me outline 4 areas where I think climate change can be addressed in Malaysia and the role that banks can play. First of all, and most urgently, we must accelerate the adoption of renewable power. Meeting Malaysia's national commitment to cut greenhouse gas emissions by 45% will require huge changes now and over the next few years. The biggest impact we can make is in electricity generation. It's all about using less and installing more renewable capacity. For example, Malaysia's commitment to large-scale solar power, increasing the mix of renewables from 2% to 20% by 2025, gives the private sector a market signal to back projects in this space. It's crucial because today, nearly 80% of Malaysia's power comes from burning fossil fuels. A key aspect of greener energy generation relates to accelerating the shift away from coal or gas-dependent activities, which are increasingly unviable and are ceasing to make sense as an option for investors and governments. Banks can play a vital role in enabling this transition by ensuring a sufficient flow of capital to let the transition take place. In addition, banks can use their convening power to bring industry participants together to ensure that the right policy environment is in place to accelerate the rollout and delivery of renewable power. At some point in time, no bank will be able to finance coal or gas-fired power generation, as investor pressure will not allow it. But we can help power utilities to move to renewable power more quickly while investing in technologies to reduce emissions from existing coal or gas-fired power stations. Secondly, we need to use incentives to galvanize the private sector to reduce its carbon footprint. The Malaysian government should take a leadership position in ASEAN on ensuring that we have the right policy environment to incentivize the private sector to play our part. This can be carried out through numerous ways, including providing tax rebates or discount on stamp duties for companies that take strides in reducing their carbon footprint. With the right approach, the Malaysian private sector too will be unleashed to apply our collective innovation to this challenge. As banks, we can also provide incentives to our customers via sustainability-linked financing structures, which we've already done here in Malaysia. Sustainability-linked loans pass on improved pricing if agreed green performance targets are met, and on the flip side, pricing can go up if the borrower fails on these targets. So the incentive to do the right thing hits their bottom line. Thirdly, banks need to continue to support higher impact ESG sectors on their ESG journey, because this is where the largest difference can be made in the shortest time. Financial institutions have a duty to play an active part in driving the debate, building the frameworks, and allocating the capital to make the low carbon transition possible. The whole financial sector needs to partner with corporates across industries with a particular focus on the higher emitting clients to help them find a pathway to a low carbon future and to protect and create economies and jobs in the process. Investors are demanding more and higher quality information about company performance, risks, and opportunities. Conventional financial reporting is no longer enough. And it won't be long before regulators in the EU and the US require carbon footprint to be disclosed on labels. This will accelerate the drive to reduce carbon in the supply chain, directly impacting companies in Malaysia, which are so integral to global inputs. Bank Negara Malaysia itself recently released the Climate Change and Principle-Based Taxonomy Guidance document, which will influence financial institutions to embed this into due diligence and investment decisions. When we as banks think about ESG, it is not to say that we will no longer support X or Y sector. It's about how we can help X or Y sector to reduce their carbon emissions in support of our wider challenge of carbon net zero. We don't want to exclude anyone, We want to bring us all together in support of our common carbon net zero challenge. And fourthly, we as banks should develop a common approach to managing the transition. In fact, through the Association of Banks in Malaysia, the banking industry is actively discussing agreeing to a common set of principles around ESG, premised on our objective to finance the transition to a lower carbon economy. We think that a common set of principles makes sense in arriving at a point where our customers and the banks are speaking the same language, and we can manage transition planning in the most efficient way possible. For example, can we adopt one common ESG checklist for customers to complete during the annual review cycle? And can we make that available online to all banks? That sort of approach will make things much easier for our customers, completing one standard document to be used by all banks. The easier we make it, the faster the adoption will be. Our discussions at the Association of Banks are at an early stage, but as far as we at HSBC are concerned, we would welcome a common approach which will ensure that the intention of the banks is clear and we act with a common objective in mind. So, in conclusion, as we come out of the COVID crisis, it's critical that banks are there to support our customers to recover and grow. But that recovery and growth must be consistent with our obligations to achieve carbon net zero in line with the Paris Accords. Failure to do so is not a legacy I, for one, wish to leave my children. Ultimately, if we're to save our planet, we have to work together, industry, our regulators, and the government. The financial services industry is the connective tissue in the economy. We must be the catalyst for the huge but necessary changes ahead of us. This is not about leaving behind higher polluting industries, but rather helping these companies and the wider economy to transition over time to new low carbon business models. And let's not forget that financing the transition to a cleaner world is also the business opportunity of a lifetime for us and for our customers. If we work together with the right set of incentives to crowd in our best entrepreneurs, we will be able to meet what Bill Gates, to quote him again, once described as the greatest challenge humanity has ever faced. And as banks, we are committed to playing our part. So thank you, Dato Maznah, and back to you.
Thank you very much for your input on the very important topic of environment and sustainability. You touched on a few things there regarding the climate change, which provides them the vast opportunity of how banks can play an important role to it. And committing 66 trillion US dollars to fund and support the climate change worldwide is not a small amount of money. And to drive growth in that transition, we see that HSBC is committing about 3 trillion to USD. That's a big amount for us to chew on. And the 4 areas to address in Malaysia, how do we address this issue, is perhaps the acceleration of the renewable power, and to move away from coal-powered generation. The government should set up a policy environment on tax rebate to encourage companies to look into this situation. And I'd like the point that he picked up about sustainable pricing on the loan on ESG initiatives. That is something that we should look forward to. And last, an important thing also, banks would have to have a commercial or a common set of principles on ESG, so that could be the push for all the industry players to look at this important issue seriously. We now move on to the third speaker, which will speak on the topic, which is digital trend in banking. Mr. Shankar Kanabiran, he is the partner in the Malaysian Financial Services Consulting Leader at Ernst Advisory Services. He specializes in large-scale banking transformation program. Let's hear from his expert views on how this much discussed topic on digital trend and transformation and innovation affecting the banking and financial industry. On that note, can I give the floor to you?
Thank you very much, Dato Maznah. Thank you for inviting me to the panel. So we heard Dato Ong setting the stage. I mean, banks are here to stay, and the kind of the opportunities that Dato mentioned. And I think I wanted to pick up one of that in terms of the transformation opportunity. And I felt that it probably be appropriate for us to share our recent survey that was done with the banks in the APAC region. Can I have the slides up, please? Yeah, next slide, please. So I thought maybe perhaps it's apt to share to set the context in terms of the survey that EY did over 2,000 banks in the APAC region, and we've been doing this survey on a biannual basis since 2010. And if you look at the graph on the left-hand side, in 2010 you would have seen that, you know, when the question were asked, are you undertaking digital transformation of your main bank's business? I think about 50% said already started, but you see a number of them saying seriously considering, all the way to not considering. But just fast forward to 2020, and this survey was done right at the beginning of the COVID pandemic that hit the entire world. And I think it's not surprising that, you know, you have shifted the landscape where almost every single bank that was returned the survey said that, you know, we have already started our journey in terms of digitalization, and 43%, more interestingly, have moved on to a wave 2 activities. What we define as wave 2 activities are beyond merely digitalization of their channels or their operations, but more of looking into new business models. So that's one context in terms of the survey, the interesting note that we can see. And if I look at the donut on the right hand side, essentially, when we ask the question, have you realized quantifiable benefits to your main business bank? You would see that about 45% of them responding to say that, you know, it is below the business case, while they have spent a number of initiative and budget in terms of digitization and digitalizing the banks. About 45% of them are saying that, look, it's below the base business case, and only, you know, 20% are saying that, you know, they have in line with the business case, and 5% are saying exceeding that. So that's something interesting to note from that effort. But more interestingly, in the next slide, what I would like to share, and what's interesting is when we ask these 2,000 old banks in APAC, where have you spent your effort in terms of digitalizing your main businesses? And I think what we've seen is that most of the effort has gone into either digitizing the distribution, customer front of that businesses, or in the operations part of the organization. Not many created new digital business models. This is again alluding to where Dato Ong was mentioning working with the fintechs, creating new business models. So when I look at the vertical axis, essentially in terms of distribution and customer digitization, we are seeing digitized Stellar, Workbench, consumer mobile web app, which we are all familiar with, RM, and enabling better customer experience and also reaching out to customers at a time where, you know, the access to the branches were limited as well. And then on the operations end, what we are seeing is that a lot of digitization and automation of back office using RPA and AI to aid that, credit automation, a lot of data-driven decisions, analytics to kind of look at next best action, for example. But where we are not seeing, I guess, from the respondent itself, is that I think creation of a new business model, either digital attacker, plug and play, playing with the ecosystem. There are some plays in terms of playing with fintechs, open APIs, and so on, but not many of them are focusing on that. Next slide, please. So I think throughout the survey, what we have looked at and all the efforts in terms of digitization, we are seeing 5 non-mutually exclusive business models emerging for the incumbent banks. I think one is essentially where we are seeing a digitized universal bank model, where the focus is on digitizing the customer touch points and operations. Basically, they're serving all segments, minor differentiation across products and services. The second model that we are seeing is that the creation of what we call as digital attacker, either targeting a specific segment or market through digital-only proposition. And the focus is on the speed and differentiation of customer proposition. So we have Tomorrow, Digibank, Genius, some of the examples that we have seen around this part of the region. The third model where we are seeing interesting play as well is what we call as the capital light bank, where you have players that does not hold banking license, but own the sales and distribution and the access to customer. They're partnering with incumbent banks, and their focus is providing unique customer experience and easy access to banking services. The fourth model that we are seeing is open platform and players, essentially, banks creating bidirectional access to banks data, processing and capabilities, and providing focus in terms of encouraging innovation and differentiated value proposition to the customers as well. And they're playing a lot with the fintech, bringing in the ecosystem players and allowing their data as well as their capabilities to be utilized by the fintech players as well. And fifth, we're seeing a utility bank model where they're creating a white label banking services to banks and non-banks. And essentially the focus is leveraging on skills to reduce the cost to serve as well. So essentially, I mean, in a nutshell, in summary, I think what we've seen is that almost every banks in APAC, 2,000 over banks are saying that, look, they've gone through the journey. Some have started the basic journey, but about 43% has gone ahead into the second tier. We're creating different business models, and we are seeing a number of business models, and it's not mutually exclusive as well. With that, thank you, and back to you, Dato' Maznah.
Yeah, thank you very much, Ms. Shankar. That's quite a good survey that we have to see the impact on how banks really have shifted the landscape to undertake the digitization. However, the investment in the transformation mostly is taking up from the distribution, and not many new business models are being created. So the operations of the back room and using data analytics, that's also very important. And now what we should look forward to the new banking era is to push to have digital business models and how they can play a role complementing with all the technology players. We now move on to the last but not least panelist. I believe our last panelist is in New Zealand, and he'll be joining us on this summit from New Zealand. And he will talk about and share his views on how to enable the banking sector to deal with digital disruption, very important component here. And as a matter of introduction, Mr. Dennis Martin, who is a very experienced banker as well. He is currently the group CEO of CTOS Holdings Malaysia, Berhad, which recently obtained its listing on Bursa Malaysia. CTOS Malaysia Data Systems, Berhad, his subsidiary, is a leading credit reporting agency. Without much ado, may I invite him to be on. Are you on now?
I am. Can you hear me okay?
Yeah, that is good. Good. Oh, welcome.
Okay.
Welcome.
Good morning. Sorry, good afternoon, everybody. Good morning, wherever you are. Firstly, thank you, Dato, for the invitation to attend and be part of this panel. It's certainly an honor. And just to clarify, I do live and work in Malaysia. I'm just in New Zealand on holiday visiting my family. And as you'll notice, I'm not a banker because I'm not wearing a tie. All the other bankers seem to wear ties. But I was a banker, and CTOS does work very, very closely with banks in their digitization process. And that's why I think we can add some color to this session today. It really is a timely opportunity to discuss post-pandemic opportunities. Many would say these are challenges, but within every challenge lies opportunity. And the bigger question now is, how do we recognize that opportunity in the financial sector and capitalize on it in the new norm, which has accelerated the digital disruption of banks today? But I want to start by clearing up a few points or buzzwords or words that are quite commonly thrown around right now. And that is digital disruption and the new normal. I'm guessing these are words that were coined by either the media or consultants to encapsulate in general terms what is happening today. But neither really makes sense to me. Let me explain. First of all, the digital evolution or path that the banks and the financial institutes are experiencing is not new. This disruption has been constant for decades. And I can relate to this going back in my own personal experience. So 40 years ago, when I first joined banking, we were in the throes of migrating from handwritten bank ledgers to a bank computer system. And of course, the computerization actually started much earlier in the 1960s. Well, how about the advent of checks from handwritten notes in the 1600s to magnetically coded standardized formats that could be read by other machines? In fact, my first job in banking was to key in the amount someone had written on a check to magnetically represent that amount on the bottom of the check. Or the introduction of ATMs, first introduced into the world in the 1970s, and what an impact that has had to banks and its customers as part of their digital journey. These are just some of the examples. There's plenty more. That digitization today is not disruptive, but part of a long journey, an evolution, if you like, that will continue for years to come. The opportunity, of course, is in recognizing that and not being left behind on that journey. And I think the new normal is a reflection of the speed of change and the factors that influence that speed. Of course, right now, that key influencer is the pandemic. Digitization itself is normal and will continue to do so until the next big thing comes along, whatever that is. But maybe some of the tools are new. Some of the methodology is new. And for many, it may be a new experience. This will be the norm and will continue to be the norm in the digital world. Banks here in Malaysia are facing a number of challenges as part of that digitization process, but many banks have recognized that and are quick to adapt and, importantly, to adopt. The challenges include increasing competition. You know, we have fintechs starting up, providing alternatives to traditional banking sectors such as e-wallets and peer-to-peer lenders. We've got new digital banking licenses being issued, so we'll have maybe 5 new banks that don't have traditional brick and mortar presence. The consumer behavior is changing. There are rising expectations. Today's connected consumer lives in an on-demand economy where within a few taps and swipes of their mobile device or card, they can have what they want when they want it. And as more apps and devices deliver instant gratification, the more it sets a new standard for customer expectations. Now, businesses in every industry will have to cater to the right now consumer in mobile-first micro moments, or they risk missing these critical engagement opportunities. The prevalence of digital banking becoming increasingly popular during the pandemic to cater for remote transactions. Now, a recent survey conducted by global analytics software firm FICO revealed that during the height of the global COVID-19 pandemic, the willingness of consumers to embrace digital banking and the opportunities that exist for banks to further develop their offering was significant. For example, and this is really interesting, 61% of Malaysian consumers prefer to use digital channels to engage with a bank during financial hardship. Now, I don't know if most banks are geared up to handle that. You know, is that something they're looking at in terms of this customer is in financial hardship, but they don't want to see you face to face. They would prefer to deal with you in an environment that uses digital channels. 27% of Malaysians prefer to communicate via internet banking. 18% use their mobile banking app. Well, those numbers sound low. That still means that 70% or so of customers do want to have that physical engagement. So I think it's been mentioned already, you know, the human touch is still going to be important, but the reason people want to touch may be differing. 28% of Malaysians prefer to deal with just one primary bank, with a further 43% saying they somewhat thought that way. What that tells me is that bank loyalty is a thing of the past. Single banking relationships are a thing of the past. Digitization has enabled consumers, customers, companies, SMEs to have multiple banking relationships with relative ease. With all this access to information, with all this access to digitalization and new bank accounts, etc., for me, the biggest issue is always going to be security concerns. And while the global, pandemic has accelerated the shift towards a digital realm, for most businesses, the rise in digital banking brings fresh security concerns. A study published in January 2020 from FICO again found that almost 4 in 5 Asia Pacific banks, that's 78%, believe the introduction of real-time payment platforms and mobile payments has resulted in increased fraud losses. The financial services sector is the most targeted of all industries. The same research suggests that firms in this sector are 300 times more vulnerable to cyber attacks than any other, with the bulk of the attacks aimed at banking customers rather than institutions. Data breaches are becoming increasingly common. 73% of Malaysian organizations expect data breaches that impacts customer data in the next 12 months. That's from a survey by Trend Micro in August of this year. It also said in that survey that 58% said it was somewhat to very likely that they would suffer serious cyber attacks in the next 12 months. 30% suffered more than 7 cyber attacks that infiltrated networks and systems. 14% had more than 7 data breaches of information assets, and 21% suffered more than 7 breaches of customer data over the past year. Then there is fraud. Increased digitalization also presents opportunity for increased fraud. Malaysians suffered losses amounting to around 2.23 billion ringgit from cybercrime frauds since 2017. According to stats from the police, a total of 67,552 cybercrime cases were reported in between 17 till June 20 this year. And the big thing is, it's no longer just the banks that are subject to this digital financial crime. There really is a real and significant risk to the banks still, but also their customers. You know, it may not be physical confrontation by nature, but it can certainly just be as devastating to someone's life. And I think that's something that banks and financial institutions cannot take their eye off. That's a reality that people have to live with and should be the focus of any part of digitization. And to be successful, the banks of the future will need to embrace emerging technology, remain flexible to adopt evolving business models, as I think we've seen already. And I think it's been said a few times already, but put customers at the center of every strategy. And for me, everyone has a role to play in being part of the future for the financial sector. CTOS is no different. We are a fintech organization supplying real digital solutions for banks that enable their growth. We have a thing called EXCOMember, which enables, you know, it wasn't that long ago in the banking industry, if you wanted to open a new bank account or get a new facility, you had to physically go into a branch and do a thumbprint scan. Imagine that in the pandemic world. Imagine that if in any modern society where people just want to do things now. And so through products such as EXCOMember, which is digital onboarding, they're able to do that. And the speed of the take-up of this EXCOMember, which was only passed in terms of its guidelines by the central bank last year, has been phenomenal. Banks have really quickly adopted to these new technologies. At CTOS, I think we've got 50-odd customers who adopted our EXCOMember solution in 6 months. Most of the large banks are adopting our EXCOMember solution because they want to make sure the customers can do it now. Fraud has been an issue that we've also looked at. You know, we built, and this is something that Malaysia can be proud of, we built the first fraud bureau in the region for banks to identify potential fraud and protect itself and protect its customers. The future of banking technology will be driven by consumers, in my view, especially Gen Zers. And if you're wondering who a Gen Zer is, I'm not one of them, because you had to be born in 1995 and above. And they see technology as something that enhances their lives. Mobile banking has become the go-to method for users to make deposits, account transfers, monitor their spendings and their earnings, and a key differentiator for bank lenders. Financial institutions clearly need to understand which mobile banking feature consumers value the most and where they stand compared to their competitors, so they can pinpoint specific areas to devote most attention to. Additionally, Insider Intelligence reported that 48% of banking executives believe new technologies like blockchain and artificial intelligence, AI, will have the greatest impact of banking in the future. And I know personally that banks are already exploring or looking to or have adopted these technologies in the hope of providing new services to its customers, streamlining processes, and of course, reduce costs. consumers can already see the benefit of that, and they might not even know it. AI is being used through most banks with their chatbots in front of the office. Banks are using AI to smooth customer identification and authentication. At CTOS, we use AI to improve our scores, to improve the way that we assess the likelihood someone will default in the future. And so this will continue to evolve. Blockchain, AI, these are part of who we are now. So in conclusion for me, digital disruption is digital evolution, and banks need to continue to ask, what's next? Identifying new potential opportunities and innovating practical solutions that can integrate with existing systems means that the banking industry can embrace and look forward to the future instead of being concerned about the loss of share of wallet. Thank you.
Okay. Thank you, Dennis. That's a good thing that we hear about the role of the new normal on consumer behavior that is changing day by day. You see that digital banks is getting more popular. However, we cannot lose touch or the human touch, as explained by Dato Ong just now. It is still important, and that can be aided by how banks use artificial intelligence and the data mining on its customers. The bank's loyalty now have shifted. We hear from you, and also a very good point that you have raised in regards to the rise in security issues and the concern on the vulnerability of the data that used to be owned by the banking system. Data on personal data must be looked into seriously from cybersecurity attack and fraud, especially from cyber crime. And this is something that banks have to manage. Important thing also to fast track on the eKYC, because that is part of the requirement for any banks to start on any relationship with bank customers. And certainly there will be solution important for any credit bureau agencies to help in this matter to facilitate the process of KYC. So on that note, ladies and gentlemen, we have today listened to the four distinguished speakers. I believe if there is participants can ask questions from the various presenters. Okay, can we have any questions? I believe some of the questions are posted in the chat group.
Can I, Dato Maznah?
Yeah. Yes, please.
I just want to post this little, transferring technological disruptions and so on. I just go back to early 1980s, when banks were just bringing in the automated teller machines. And the banks were finding it that certain accounts are being closed. Then the Bank Negara asked the Institute of Bankers, where I was then, to do a survey to find out. And shockingly, what came out is that many people wanted to go to the bank and see the beautiful girls at the counter rather than dealing with the automated teller machines. So that's the sort of a thing that found about nearly 40 years ago. Now, can I ask the bankers, particularly Dato Ong and Stuart, will bank branches become to some extent obsolete as we go in the technological innovation side?
Maybe I'll kick off on that one. It's a really interesting question. I do think that there is an inverse relationship between internet penetration and bank branches at some level. So in other words, as internet penetration goes up, you find that the number of bank branches and the square footage of those branches comes down. We've seen that in many economies, and we're seeing that happen in Malaysia today. So I don't think that's a surprise. I think that, however, that does not mean that bank branches are going to go to zero. I think there will always be a need for bank branches. But what we'll probably find is that the sort of activity we're doing in the branches is quite different. It won't be in the future anything to do with cash. It won't be to do with, you know, issuance of credit cards, because credit cards will all be dematerialized. It's much more likely to be around the more complicated and the higher value add product sales, like wealth management or perhaps mortgages. So I think that's what we'll see. I mean, certainly for HSBC, coming out of COVID, globally, we expect a 20% reduction in the square footage of our real estate by the end of this year. So that's a reduction of nearly 4 million square feet worldwide. So I think the kind of broader question is, with the change in behavior being established by COVID and accelerated by COVID, banks do have an opportunity to move to much more flexible work arrangements, and as a result, save a lot of costs. That, of course, has got implications for the owners of those assets that we currently rent, because in the future we won't be renting them. And I suspect that there's going to be a lot of stranded real estate assets over the coming 5 years, and that's something else that we're going to have to work through. I'm sure that Dato will be able to supplement.
Yes, thanks, Stuart. I think we recognize that over time, as customers, the young generation of customers mature, they were very comfortable with doing digital. But again, when they mature and they want strong advisory things, they will go to the branch. They want to see somebody. So I think we, as a bank for long in Malaysia, we always want to make sure that we're always there. Because when we try to transition, we must make sure that our staff is not affected. Even our stakeholders, our landlords, know exactly what we're doing. I think it's not easy. Certainly the banks have also reduced the footprint. Even within OCBC, we have the same ideas as well. But we are trying to make sure that it's an easier transition for everybody. I think one thing we realize is that on the cost is that it's not always that easy to really invest in technology, get the transformation of your staff and everything done, and at the same time you have a win-win where the cost also comes down. I think it's a question of actually increasing your costs and increasing investments first. What Shankar said is very true. I think the banks, to reap the benefits of digital transformation, you have to also change your business model. Because if you don't, you are just going to layer one technology into another. At the same time, you're also careful to make sure that you don't leave your staff behind, and you also want to educate them. And all these are huge investments in capital, in IT. I think the business model transformation, working with maybe the ecosystem partners on a win-win, because we can cut and serve a broader spectrum of the economy. Currently, I think banks, because of their nature, because we are regulated and we're quite careful in risk management and all that, certain sectors are not the ones that we will really serve. But they are also what we call the early birds that one day could be big giants. And who's going to serve them? We need the other players who can do that. To answer the question is that I think we hope that there's a smooth transition, like everything, ESG. The banks themselves, working with the regulators, make sure that transition is something that is acceptable to our customers, our staff, and also our landlords.
Thank you, Dato Ong. We have one question here. Okay, what is the panel's view on central banks' digital currency and its implication to banking deposit and the future of fintech? Who can address this?
Maybe Dato, I will
Yeah.
I will try my first dip into the question. I
right.
think my view is that it is something that I would definitely urge central bank to look at it, CBDC, because I think you have countries such as Canada was one of the first one to kind of do a pilot on this, and there are a number of countries that are doing this. And I think you have parallel systems today, Bitcoin, Litecoin, and so on that's going on out there that are also impacting into the overall transactions as well. And my view is that you rather have a regulated body that is looking at issuing a CBDC rather than relying on Bitcoin. I think that the challenge is, I think everybody is jumping onto the Bitcoin bandwagon, but then I think the underlying factor is that nobody knows how the price fluctuates, and there's nobody that really determines what's the actual value of that. But if you look at a banking and finance sector, I think the underlying factor is, I think, as Dato Ong mentioned earlier, it's about the trust, right? I mean, today you've read multiple news. I mean, the wallet, now Bitcoin wallet providers that's been hacked, and then you lose your money. I mean, where's the trust element of that? So in my view, it's a good thing that our central bank should consider CBDC. And I think in terms of the ecosystem itself, definitely, I think to execute and implement that, you would need the banking ecosystem to be full on board onto this, as well as the fintech as well. At least that's my take of the CBDC.
Okay, thank you. So that can correspond to quite a number of questions on this Bitcoin thing. Regulation is underway, is it? Central bank is looking at that, and that's very important component, because not many people are into it, but this is something that is forthcoming. Yeah. This question on sustainability, we can see that the crisis can lead to change, and the pandemic actually is causing the acceleration in the adoption of that technology at a faster rate. How do banks sustain this adoption? To say, for example, like how do we educate, the digital tools, reduce bureaucracy, and to manage the health and well-being of human resource, and also maybe leadership, which is becoming so vital to lead the sustainability and profitability of the business. It's a business question. Maybe someone can address Dato Ong or Stuart. Yeah.
This question of of adoption of digital ways of doing things is quite an interesting one. So we've been on a journey of trying to achieve a situation where 90% of transactions done by our corporate clients are done online by the end of this year, and by the end of next year for 90% of our retail banking transactions to be done online. And we've had this challenge out there internally for the last almost 2 years now. And a lot of the time we are spending on educating customers. So going to customers, holding a lot of webinars, seminars, hand-holding customers through the change in approach, because there is resistance to change. There's no doubt about that. And we have to really spend the time, invest the time to get customers to see that actually doing things digitally is much more secure and it's much more sustainable. Of course, COVID has had the benefit of accelerating that process, and everyone's seen that digital ways of working are really, really important. But there's no doubt it's a challenging task, so you have to invest the time, you have to invest the effort. And of course, you've got to have really easy channels for customers to use in order for them to switch.
Okay, thank you. This is question, I think, posed to Mr. Dennis. As you have mentioned, either blockchain and AI will be the future of finance. Some countries, such as El Salvador, has already accepted Bitcoin as legal tender. Are banks in Malaysia looking at this and considering blockchain technology implementation in the future?
Yeah, I think that's already been asked and answered in the previous one. And
Shankar,
and I think that's quite accurate. I think it does need to be led by regulators. They do need to have a look at it and see what works in country. My guess, as a non-banker, if you like, or an ex-banker, would be that I think there is some validity to it, and I think it's something that will come into play, but it has to be regulated. It has to be clearly defined as to what can and cannot happen and what the implications of that are.
Okay.
But for example, in
Yeah.
you know the relevance of blockchain in trade finance, we've already done Malaysia's first documentary credit transaction on blockchain, using blockchain, and actually now we're commercializing that. So we have one customer that's on the platform on a commercial basis. It's no longer in test phase. So looking beyond digital currencies, but to the application of blockchain more widely, it's already happening in Malaysia.
Oh, okay.
Yeah, and that's the basis for open banking, right? Blockchain.
Yep.
And that's already in use in many countries. And so I don't see why that wouldn't come here eventually.
Yeah, there's a ARC3 consortiums where more than 100 over leading financial institutions that's involved in that as well. So I think it's real and it's already happening for last few years.
Dato Maznah,
Hey. Yes.
can you permit me, I know you're coming closer to the end of the time. I just want to ask this question. I think it is from the earlier speech by Tan Sri Abdul Wahid Omar when he gave the perspective. And then the banks are in solid position during even this crisis period, and therefore the recovery and the contributions of the banking sector is going to be well. And then the Minister of Finance did bring up this recovery, resilience and reform. And it gives the impression that banking sector is quite strong and not very vulnerable during this COVID period. But the customers and the businessmen out there have got big issues. And the minister also mentioned that up to September 2020, the moratorium has been given on the interest payments and so on. But the customers and the public at large are expecting much more from the banking sector. And therefore, what is the view of the bankers in order to contribute to this recovery, resilience and reform in the remaining part of 2021 and into 2022, taking into consideration the minister's views on this?
Yeah, I mean, it's again a good question. First of all, just speaking for HSBC, you know, our profits in Malaysia fell by 2/3 last year. So it's certainly not true to suggest that banks somehow have escaped the pain of the crisis. And personally, I've always believed in my 40-year career of banking that as bankers, we only do well when our customers do well. So when our customers are under stress, then of course we're going to be under stress. Banking revenue has fallen dramatically as a result of the decline in interest rates that YB referenced. And it's also fallen because of the rise in bad debts. And that's coming from what we've seen over the last 18 months. That shouldn't be a surprise to anyone. You know, given the situation, the banks will be under pressure and we won't see growth in the banking sector come back until probably second quarter next year, something like that. The other point I'd make is that, you know, going back to this comment that we do well when our customers do well. So we follow our customers. Our customers are our lifeblood. So we want to do everything possible to get our customers back on track and to see them through this crisis. And that's why we've been supporting the moratoria, in fact, going beyond what was asked of us in the early part of the moratoria to help our customers to become resilient and to recover more quickly. I'm certain that every bank is looking at this to say, well, what happens next? Because we know that there's a moratorium that ends at the end of the year. We still have an obligation as banks to help our customers recover. And we will all be doing exactly that because that's in our interest. That's what we do. In addition to that, there's been a number of discussions with the Ministry of Finance on ideas that we both have so we can come together and help this, particularly for the SMEs and the B40, you know, how can we do more to help collectively between the banks and the ministry? And I'm sure that there'll be announcements about that in the not too distant future.
Anyone else to add? Dato?
Stuart, I think the banks have been working hand in hand with Bank Negara, the ministry and the governments to give the feedback necessary to make sure that our customers will get back on their feet. I think clearly one of the biggest issues for businesses and customers who are employees of those businesses is the fact that there is this lockdown, which is gradually opening up. We're heartened by the fact that with the higher vaccination rates, the country is poised to reopen and resoundingly. So I think the past is the past. I think we take that journey with our customers to good and bad times. Clearly, you know, when a customer takes a loan from us, it could be a housing loan for 35 years. So what is it if we have to help them over 1 or 2 years? I think the journey is a long journey, but it will go through good and bad times. But critically now we're focused on how to get them back on their feet. And clearly, I think discussions with the Ministry of Finance and also Bank Negara is how to make sure that the banks continue to make available liquidity. Liquidity is the most important thing. Clearly, what we don't want to do is burden further customers with debt. I think in the past, if we look back at the banking industry, we have actually grown very, pre-COVID, I think 2010 to 2020, the industry grew by 8%. Consumer debt grew by 121% over the last decade. So some of it would not be that sustainable. And I think we also have a duty not to put on debt to just facilitate growth. So I have to be very careful that our debt has to be productive and create more value add and is good for the economy overall. So I think this is something that the banking sector is working very closely with Bank Negara on this journey.
Okay, thank you, ladies and gentlemen. You know, we have come to the end of our session, and it has been a very informative session this morning, having heard from all our distinguished speakers. In summary, the key takeaway from our discussion, in particular, banking after pandemic or living with COVID-19 hereafter, is that we will have to relook at the entire impact on society, and in particular for banks. This will include having the best bank management in terms of operation and technology, people's management, financial performance, new models of risk management, innovation, which could start from other platforms, and lastly, fintech industry, which is the new criteria to evaluate the industry to become a subset of the banking industry. On that note, ladies and gentlemen, may I now, on behalf of the organizers, take this opportunity to thank our distinguished panelists, Dato Ong, Mr. Stuart, Mr. Shankar, and Mr. Dennis for their invaluable input this morning. Have a nice day. Thank you so much.